So what was really funny, I woke up one day and I realized someone threw a tomato at my face. And I was like, whoa, I got roasted. But it's not all bad. I mean, sometimes when you get roasted, sometimes when the market is red, there are good things that come out of this. In today's KuCoin DigiDive, I'm going to give you guys 5 different things you guys can do when the crypto market is, well, doing what it does. If you guys haven't signed up for KuCoin, there's a link in the description below. They actually have a special going on. When you sign up, you actually get a chance to win $500 in USDT for free. Let's go and get into the first step. The first step is diversify your holdings. What I see some traders do is they'll throw 90% of their portfolio or even 100% at one coin. Let's give you an example of why this could be a bad thing. Let's say, for example, you put your full portfolio in Luna. And, well, Luna did what it did. It went from 120 bucks to 0, just basically. What that would mean for your portfolio is you now have no money. Everything is gone. This is why it's very important to diversify your holdings. That way, if a black swan event does occur, you have other holdings as well. Now, it is a bit harder to diversify a crypto portfolio because if you're buying Bitcoin, you're buying Ethereum, you're buying Luna, you're buying Cosmos, these are all cryptocurrencies and they are all somewhat correlated. This is also where it helps to buy other assets. This could be like houses, this could be like stocks, this could be like gold, silver. These are just other ways you can diversify. If you're specifically looking to stay in the crypto markets, some ways you can look for good and strong projects are looking for ones that have a runway and ones that are building. A lot of projects in a bear market will stop building because they either give up, they don't have enough money, or they just rug. That's typically how it rolls. But the TLDR is, for the most part, if a dev can't eat, I'm sure they're not going to code. One of the best ways to figure out the treasury/runway for a project is to get into the Discord or in the Telegram. When you get into Discord and Telegram, you can look for Medium articles like this. As you can see here, this is the quarterly treasury report for Thorchain. This was in Q1 2022. It shows the treasury comprises of $217 million of development. Now this is good. They got a lot of money. This checks off our first box. This is a lot of money. This is good. This is awesome. But can they sustain with that? How big's their team? Is it enough to pay their team? Are they a team of 1 million people or is it just 10? Well, I would see 217 being sufficient for a team of 10. Cool. So it passes check 2. So if the total treasury as well as the team is, yeah, this is good. Like the treasury can pay for the team. Then you move to the next checkbox. The next checkbox would be, what is the treasury valued in? As you can see here, the protocol reserves total 173 million rune, worth $2.1 billion. This is given for mainnet emissions. So this is interesting. Okay, awesome. So they have $2.1 billion. What are these allocations for each? The non-rune assets value at $15 million. The rune assets are at $125 million. And the LP assets are at 76 million. Okay, so they're pretty well diversified, but the non-rune assets, so the ones that have non-correlation to the protocol, is $15.4 million. So not to get all complex, just in specific on Thorchain, I understand how they function. All the LP assets are paired to the rune token. So let's say in theory rune goes to 0 or goes very, very low in price. This will cause the treasury assets to suffer. So this is why I specifically just focus on the non-rune assets. I can see that here they have $15.4 million. In my opinion, this would be a comfy runway for the team and project to build and run until the next bull market. This is one of the first tools you can use to diversify your holdings. Figure out the project's runway and if they're capable of building. The second most important thing is to zoom out. This is very important to put things into perspective. Let me show you a chart on Bitcoin. Just imagine you bought Bitcoin at this price. Down here, 4,000 bucks. Or you know what, better yet, let's say you bought it at $13,000. This was back on 2019. You would probably be like, bro, this is horrible. I bought at $13,000 and it's now sitting at 4,000 bucks. Basically just got wrecked. I'm down 60%. What the snap? Well, if we zoom out, let's go ahead and see what happens. That little position we were in where we thought we got completely wrecked is now just a blurb on the screen. You can barely see this. This is the price it is now, 3 years later. Even after being down over 60%, Bitcoin is still 3 times, almost 3 times the entry price when we bought at the peak. Sometimes it always helps to zoom out. And of course, this doesn't work for every asset. This is mainly in specific for the assets that have good fundamentals and have staying power. And remember, when the prices are low, it's just like going to a grocery store. Nobody goes into a grocery store and is like, where's your most expensive items? I want to buy it now. No, they look for the cheap stuff that matches what they're looking to get and get it. That's why they came out with the generic items. The next thing you can do is DCA. You can use this as an opportunity to dollar cost average into any of these different positions. Just imagine if you bought the dip when Bitcoin was 40K. But with Bitcoin being around $31,000, you would probably be like, not so much. This is not cool. However, if you would have done 40K, 35K, 30K, and then even when it wicked down to 25K, if you average the 4 of those prices, you would be sitting around an average DCA price of $32,500. If you bought the same amount at $40,000, $35,000, $30,000, and at $25,000. If you just DCA'd and made an entry at each of those times with the same amount, your DCA average would be about $32,500, which is just about the price now. That's the power of dollar cost averaging. And with that point in mind, let's go ahead and segue into the fourth point. This is really important. Always save some bullets. When I refer to bullets, I mean cash or stable coins. Don't spend it all in one dip. You don't know when it's going to be the next dip or the last dip. Sure, you may miss the very bottom, but if you have some bullets, always have that opportunity to buy when it takes another leg down. And lastly, has to do with Bitcoin dominance. In a bear market, Bitcoin dominance always trends higher. In a bull market, Bitcoin dominance trends lower. As you can see here, we've been in a bit of a low period on Bitcoin dominance. Could this potentially break out? Time will tell. We'll see what happens. But there is a lot of headway to recover. When Bitcoin dominance goes up, this is not good for altcoins. This is usually a sign that Bitcoin is taking more of the market share, and well, it's not as good for altcoins. The reason being is people are choosing to buy Bitcoin over these altcoins. So using Bitcoin dominance as a tool to measure when it's a good time to buy or not is very important to do. It also tells about where the market is at. If you're starting to see the early stages of Bitcoin dominance trend up, that usually means it's early signs of the bear market / the middle of the bear market. Now when it starts to peak out and top out, those will be signs that the bear market is starting to end. They could be quick, it could be long. That's why it's also important to follow the first 4 steps I gave you in this video. 1, diversify your holdings. Look for projects with runway and are building. 2, zoom out. Just because you buy an entry price today and it ends up being down 20% the next day, zoom out, go a couple years into perspective. 3, dollar cost average. You're never going to buy the bottom and you're almost never going to buy the top. I hate to break it to you, but that's why the charts look the way they do. Points on the bottom, points on the top, because barely anyone buys the bottoms and the tops. 4, always save some bullets. You're never going to buy the bottom and you're never going to sell the top. Unfortunately, it just doesn't work like that. But if you DCA and buy at different times, you will get a better lower cost average. That's why they call it the DCA or dollar cost average. So those are 5 different steps you guys can use, especially while the crypto market is, well, doing what it does. And remember, this is a great time to go get some fresh air. Use this time to set the goals that you want and use this as time to create a strategy for dollar cost averaging. This too shall pass. Let's go ahead and hit you guys with a wisdom one-liner. Proverbs chapter 14 verses 9. Fools mock at making amends for sin, but goodwill is found among the upright. Be good, be nice. We're all in this together. Thanks for tuning in, guys. I hope you guys enjoyed this KuCoin DigiDive. If you guys would like to get your chance to get the $500 in free USDT to see if you guys win, you guys can sign up in the link in the description below. That will also give you 20% off trading fees. Tell me what you guys think of these 5 different strategies, and tell me what you guys think on the markets. If you'd like to see some of the previous videos, there's one here, 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 and like there.